Welcome, everyone, to the Tools of the Trade live stream. I'm your host, Captain Cole, and I'm joined by my co-host, Trip, also known as Crypto ISO on Crypto Twitter. We got an awesome options episode for you guys today. Before we introduce our guests with all of our incredible viewers, do me a quick favor, smash that like button, make us look good for the YouTube algo. I also want to take a quick second to thank our sponsor, Phemex, one of the only non-KYC derivatives exchanges left in crypto. So click the link in the description below to get up to $6,000 in sign-up bonus. Now, the last thing I'll say before we get started here on Tools of the Trade is that nothing we say here is meant to be considered financial advice. We are not financial advisors, and this information is for entertainment purposes only. All right, so now that I'm done chilling, Trip, how's it going, my man?
It's good. It's good to be back for another episode. I got my pencil and notepad ready. I'm going to become an options guru by the end of this, so pretty excited. I think it's coming from traditional finance, it's like definitely a big part of the markets, and like crypto, it's still relatively new. But looking forward to hear what our guest Marty has to share with us, and hopefully it's helpful to the viewers and anyone else tuning in.
Awesome. So yeah, let's bring him on. Marty, how's it going, my man?
What's going on, guys? How are you?
Doing well. I know it's late for you, so I appreciate you taking the time. I'd love to kick things off with a little intro about yourself, who you are, how you got into space, and then we can kind of kick it away from there.
Sure. Yeah, my name's Marty. I always talk in third person on the Bird app, but if you meet me in person, I don't. And I guess a little about me. I think I got into I should say, like, I'm not a traditional finance guy. I didn't come from TradFi and then into the option space. I came from, buying illegal things online with our coins, and then learned how to try to trade directional, try to become a TA guru, a TA master, and then that turned into basically being in the space at the right time when things were just up only and things were easy. Made some money, and then it was more, how do you keep the money, instead of, oh, we need to gamble up and down. I got taken under the wing from a fund, a firm, started as nothing and learned all the way up, and then I run a small boutique crypto fund now. We're not a huge major player like a Genesis or a QCP, but you'll see our quotes on the board in the option space for sure.
Awesome. So yeah, what kind of got you prompted into pursuing options? Was it just like, TA is not for me, I want to do something more delta neutral, or what kind of got you interested in that from, not coming from traditional finance?
It seemed like the only way to make money when we were doing nothing, right? I got in, my first like 10x was 100 to 1,000, and then I saw us go back to 100 within a few months, and I was like, oh my God, what do you do at that point, right? When you're down 90%. And at that time, there was no crypto options, right? There was no derivatives. I think Deribit was 2016 or 17. Don't quote me on that, something like that. And the only thing that I could do was just like accumulate more coin, rode the next one up, which was 2017. And then, how do you keep this, right? Because I know it's not worth 20,000, right? Nobody knows about this. Even the taxi drivers talking about it. It's not ready to, Bitcoin's not ready to take over the world financial system yet. And I really started learning options vol, or the vol space, in 2017, 2018. And then it's the only way to make money when in any market condition.
I like that. That's awesome. So yeah, why don't you kind of, I personally am options newbie. I think I'm going to use that word newbie as a light way of putting it. Give us a little, I guess, options 101 from Marty, basic, rudimentary, how do options work in crypto? And then we could kind of dive into more deeper topics.
Sure. It's a little different in the crypto space versus the traditional finance space. Options rule the markets in the traditional finance space. There's way more notional volume in options traded than individual shares. That's because one contract in TradFi is 100 shares. So it gives you the right to buy or sell 100 shares at a specific price at a specific date. One of the reasons I think that crypto options hasn't really taken off is because one contract is one share. So it's a lot easier for people to go on and click 100x up or down, green or red, instead of, oh, if I buy this, I don't know, like on Robinhood or something, right? Or, I'm going to
Sure.
buy this one call and this is going to do a 10,000x if the price moves whatever 100%. So that's one of the reasons that I don't think that it's really taken off. The major players are TradFi guys that have come into the crypto vol space, and they're starting to move size, but it's nowhere near perp volume, right? It's nowhere near spot volume, and there's some simple option strategies that you can run in TradFi that I don't think really work out in crypto. We can talk about that a little bit later, but for me, one thing, just one like a one-liner for options is options are the best way to get into any sort of position you could ever think imaginable. You can make money in any sort of market conditions, up, down, sideways for months. It's just you have to know what you're doing and not just click buttons.
Takes a little more math, huh?
Yeah, well, the computer does the math, thank God, right? We're not doing it by hand. But a simple strategy that's been paying off for a lot of new users is holding spot, so they never have to sell their spot, and then they sell covered calls. So I don't know, you hold one Bitcoin and you sell one contract at $40,000. You collect, I don't know, $50 or something. Um, but if the price goes over 40 grand, you have to sell your one coin at 40 grand. Well, as long as the price isn't over 40 grand, you collect that $50. And if you can do that every day, every week, every month, every quarter, every year, that adds up. And if if you have 10 coins, 5 coins, 100 coins, 1,000 coins, that starts to really increase your coinage. Coinage isn't a word, but increases your holdings.
Awesome. Makes sense. So then, I guess let's get a little bit deeper now. What is your go-to option strategy in the markets? I know you said you're kind of delta neutral on making money regardless of direction. What's your, go-to bread and butter option strategy?
Sure, yeah. We run a bot, so it's in and out of positions in seconds and minutes and hours. If I was just manually clicking, since Friday, I guess, I've been selling, um, what is it, on ETH, I've been selling 1,900 calls and 17 or 1,800 puts. And that's just, I don't know, it's super small. I don't know, you're making probably $4 a contract. Okay, but you put 1,000 ETH. Okay, that's 4,000 bucks a day. That's been my go-to manually for since Friday.
Okay. Nice.
I wouldn't recommend that though. Okay, don't do that, right? Yeah, don't just copy that advice slightly, right? It's a joke, right? I always say, oh, it's easy pimps or it's that easy. It's not easy, right? We're fully hedged, we're fully delta hedged. So with perps, how we use perps is we fully keep our deltas neutral, which means if the price goes crazy, right? We're selling this contract at I don't know, let's say 1,900 on ETH. And if the price goes over 1,900, it's an infinite loss essentially. If it goes to 10,000 tomorrow, you're going to get liquidated way before that, right?
Of
So you
course.
have to hedge out the position, and the easiest way to do that is with perps, perpetual contracts. And our bot is every 5 to 10 seconds. So every 5 to 10 seconds, it rebalances our whole portfolio, even if it's on my uh, manual PA account or if it's on the bot account. So if the price goes to 10,000, yeah, it'd probably be, underwater, but the hedge would cover majority of the loss, not minus, 10,000% in an hour or whatever it is.
Okay, that makes a bunch of sense. So let me kind of pick your brain out a little bit deeper on volatility, right? So, as traders, volatility to us is basically, price moving up or down a significant amount, which gives us opportunity as directional traders to trade one way or the other. Now, I know from an options perspective, you look at that quite differently. So can you kind of touch upon your understanding of volatility for us and how you kind of use that to inform your decision making in your options trading?
Sure, yeah. Options for us are priced in IV, which is implied volatility. So we don't sell an option like, oh, it's $50. We'll sell an option like it's we call it 50 vol, right? Like 50%, right? So, or 40 or whatever it is, 60. If at the FTX spike, I think ETH hit 120 vol, and that's like insane. Traditional markets never get to that level. So for
Unless
us,
the
options are
regional bank.
unless you are a regional bank.
Well, it was
Yeah.
First Republic's like Ivy at one point was crazy high. I remember looking at that.
Right, like the easiest one that I remember is like 2008 SPY was like 80%, so it was an 80 vol product. Like that's insane for traditional markets, right? It usually trades under 20 vol, which is simply saying like that the market isn't implying a huge move in the next 30 days. Where in crypto, we trade high volatility products. We like these huge, $1,000 Bitcoin days, $100 ETH days, and that's like totally normal to us. Where if you tell traditional finance people, "Oh my God, I'm trading a 120 vol product," they're like, "Dude, you're gambling, right? You need to get out of this space right now. You need to get an IRA, and you need to buy a SPY, and you need to make 10%, and you're going to be happy."
You will own little vol and be happy. I like that. So let's get a little deeper now. How do you use vol to actually inform the decision making in your process? So obviously, when you see high vol, how are you trading that versus when you see low vol? What's the go to strategy one way versus the other?
Sure. If you're buying options, you're long vol essentially, and if you're selling options, you're short vol. And if you are selling options, people say you're picking up pennies in front of a steamroller, and they'll always hound pound this idea on your mind. Oh my God, you're picking up pennies in front of a steamroller. One day you're going to get crushed, right? It's called an IV crush, where IV just spikes. It's like VIX, like the VIX product in traditional markets. It just goes up 20% in one day, and option sellers are essentially wrecked, right? But if you look at crypto markets, our last major vol spike was November of last year. So November, which was FTX crash, all the way to May, it's been down only in volatility. And right now it seems like it's coiling up. And we can get into that a little bit later on what that means. But vol has been down since November, and it's been for us selling options only since November. When the regime changes and it's back to up only, up in vol, price up only, then we'll go back into buying vol. But for right now and since November for us, it hasn't made sense. If you've been a buyer of vol since November, you've pretty much been SOL every day paying theta to Marty.
Awesome. So, can you actually break down theta for us? I feel like that's a term that's frequently used in options, especially for crypto. And how does that relate to, the price of options and profitability on certain strategies?
Sure. As the longer dated that the option is, the less that the theta is, and theta is essentially a payment that you pay every day. It's a time decay, so the theta will get higher and higher the closer it gets to expiration. So let's say if you buy the end of the month any option, I don't know, May 30th or 31st, then at the maybe you're paying $5 today, and at the end of the month you're going to be paying $40 a day, and that's per contract, right? So I have a lot of people message me, "Oh, I bought these calls or I bought these things, but my theta is like $1,000 a day." And I'm like, "Do you understand that you're losing $1,000 a day, and the price has to mega soar? I don't know what's the price right now,
27.
7,000.
Yeah.
Yeah, so let's say if you buy the $28,000 call for the end of the month, whatever the price of your option is, you have to be above that to break even. So I don't know, let's just do a rough estimate. The price has to be, your strike is 28,000. I buy the $28,000 outright call. Every day I'm paying theta, but my break even is maybe 27,500 because of my theta payment and my cost of the option. So if it goes to 29,000, 40,000, 50,000, of course you're going to make a shit ton of money. But unfortunately, volatility markets right now are pretty dull and near all-time lows, especially in ETH. So for it to do, I remember like $5,000 a day candles in Bitcoin. Yeah, that's not happening anytime soon unless there's a volatility crisis, a black swan event, which I don't see right now.
Okay, so then in that same vein now, let's pivot a little bit and talk about how you see volatility going into, I guess, the rest of the quarter and probably going into the end of the year. You said you're kind of short vol right now because you don't think it makes sense. When do you anticipate, or do you anticipate a regime change this quarter, this year, and I guess going into the future weeks, months?
Sure. I'm not going to say exactly what we're doing, but a lot of funds have taken on a lot of inventory of short vol, just trying to get a gold star of who can sell the most volatility. It's been like a pissing game basically between a handful of bigger funds, above our league. And there's been an interesting trade going on, which is they're long Vega, which means that Vega is another Greek, just like Theta. There's a handful of them, but Theta is an implied volatility Greek. So they're just betting on implied volatility rising. That doesn't necessarily mean that the price goes up or down. Of course, everybody hopes that the price goes up, right? If the price falls $10,000 in a day, it goes up $10,000 in a day. It's a volatility event, and then maybe the next day volatility crashes or keeps going on. But the interesting trade that these bigger funds are taking is they're basically short June into June because everybody goes to the Hamptons in New York, and then they're long September, December into the end of the year, and doing this sort of trade. If the price goes up, you get a free call, right? You basically get um, a free trade towards the end of the year if the price keeps going up. But for us, I don't know if that necessarily makes sense because you have the Bitcoin halving in 2024, and
Yep.
then you have the presidential US elections in 2024, and this seems more like a bigger catalyst for a volatility catalyst than Q3, Q4. And that doesn't mean that the price can't go up or down, right? It just means like a full total regime shift where this like a 2008 to 2021 where it's just up only again, right? Where there's a
Got it.
full regime change. I don't see that happening. Maybe we're wrong, right? Today I'm not feeling like, oh my God, just because these funds are doing this, it's right, right?
Hmm.
Maybe the trade is just cheap. That's always why people are doing this trade. Oh, vol's cheap. Well, right now I think Bitcoin vol's like 50 or 51. It's basically muted, right? Usually we want to see like 70 to 90. And there's no reason that it can't go lower. And I don't know, people can fucking quote me and timestamp this later, but there's no reason that it can't go lower. And the only way unless there's a black swan event, the only way to dig yourself out of this low volatility regime is time. And time, maybe you get a big fund buying some crazy amount of Vega, which ends up shifting the whole market. I think Tony Stewart put out something today, like you would need like 2 million Vega, which is like an insane amount of option buying in crypto to actually push the market into a new regime. Or you have this catalyst, which is the supply crisis, the halving, and the presidential elections 2024. That seems more natural for me.
So then, in that same vein, am I right to go out on a limb and say you kind of expect a muted rest of the year in terms of volatility? Price can chop around up or down, but we're not really going to see large, volatile directional moves until going into next year into those events you just mentioned.
That's kind of what I'm looking at now, unless you have some black swan like I don't know, you have all kinds of shit going on right now. You have Celsius, you have all these different events that are coming up. And as let's say Binance goes down tomorrow, like an FTX. Oh, everybody's screwed who was selling vol, right? It's up only. You're going back to 120 ETH tomorrow. All option sellers, if they were unhedged, you're going to have another three arrows type situation where big funds are underwater and done and out for. But looking at TradFi and looking at crypto, it just seems muted, unless these guys are right that you're getting this Q3, Q4 pump, maybe just, Santa pump, pay for Christmas presents. But people seem to be going to the Hamptons for the summer.
I like that. Makes a lot of sense. Let's talk a little deeper now, I guess. Let's get a little bit more specific about, I guess, Bitcoin and ETH. You mentioned that you expect kind of a muted regime for at least the remainder of the year. How does that kind of inform your decision making in terms of strategy? Are you guys going to keep just being short vol for the time being until like kind of if it doesn't break, if it's not broke, don't break it, and then kind of keep selling vol until you kind of take a scratch, or do you kind of anticipate a certain time period where that changes and you start changing the strat before it stops working?
Yeah, on my personal account, I'll still be selling vol until it doesn't work out, right? I'll pick up the pennies in front of the steamroller and I'll stay hedged. And if there's a regime change, then my PA, then I'll deal with that, right? But the bot is a lot smarter than us. We're redacted compared to the bot. It picks up on these simple to advanced little indicators that we don't see, and it will buy and sell things that a human would never sell or buy, just based on if it's overpriced or underpriced and what it's calculated on. And there's various ways to calculate crypto options. You could have a 5-hour podcast about that, a month-long podcast live about that. But what everybody's seeing right now is Bitcoin, ETH, NASDAQ, and gold. If crypto starts pulling what that gold chart looks like, where it's just up only, right?
Mm-hmm.
Then of course we would have to change the strategy. But I think this is a pretty good visual that people are seeking real safe havens instead of this idea that people are going to Bitcoin and stuff. No, they're going to gold. Just look at the chart. It's the same timeline, same everything, and it's just up only compared to everything else.
Interesting. So let's kind of pivot now. How do you use this chart, and I guess the one after the correlation I'll show in just a second, to kind of inform your, I guess, macro book take and how you're positioning?
Yeah, this is just like a multi-year chart, I guess, all the way back to 2021 for these various assets. This doesn't go to everyday trading, but just looking at this, you should have been Peter Schiff and you should have been long gold paper, right? Instead of Bitcoin and NASDAQ. I think the NASDAQ closed up for the day, but it doesn't make a difference on this year multi-year chart. Looking into this one, nothing that you're going to catch any major alpha besides that you should have been long, hard metals.
Okay.
And the
Makes
next
sense.
one is a correlation. We added gold because some people wanted to see gold Bitcoin. You could see Bitcoin and ETH at the top. It's a little choppy. I know the colors are a lot, but the green line, Bitcoin and ETH basically move in correlation. ETH will move more, alts will move more than Bitcoin. Well, that's because they're a little cheaper for people to buy. The market cap's smaller. You can move the market a little bit more. But when we wake up in the morning, how's NASDAQ? How are the futures looking? How's Bitcoin looking? And I don't know. There was always this saying, like, I guess last year, 2 years ago, like Asia was bidding, right? Like
Yep.
U.S. markets were pretty dull, and Asia was bidding. U.S. markets were closed, so Asia can pump it. But then you go look at the Hong Kong exchange and the Nikkei and the Japan exchange, and it was pretty bland anyways. I'm not sure if it was more of a meme than Asia was bidding for us.
Interesting. So I got a quick question for you from one of our viewers. He's asking, Exotic's asking, if these options are played by the biggest players, can this be a clue to the directions of the market, like we use, liquidation levels? What's your take on that?
Yeah, I mean, it's kind of like that trade that they're taking right now. They're super short options, but they're taking long vol approach. They're saying that their trades are saying that summer is going to be muted. And that doesn't mean Bitcoin can't go up or down, right? Bitcoin can still move, but volatility and options will be muted. And then in Q3, Q4, they believe from their trades again that the price is going the price of the options is going to rise, which just means that the volatility is going to rise. That doesn't necessarily mean that the price is going to be 50K, right? Just means that their options will increase in value.
Got it. Okay, that makes sense. So let's pivot now and talk about this next one.
I actually have a question. So if you're going back to BTC and gold from the beginning of the year and looking at those charts, obviously, liquidity and volatility and the difference of volatility in the assets is going to play into it. But like percentage basis, BTC beginning of the year versus gold beginning of the year, like, so what is it? It's
Bitcoin's up in a percentage, right? It's up like 60% or something like this.
right. Gold's up what, like fifth? I don't know. How much is it? Like,
Yeah, from 1600 to 2000. Nothing compared.
right. Because that's the argument you get a lot from people who are like Bitcoin maxis and like you should own this over gold type thing. So curious.
Yeah, sure. Go ahead. Hold it in your ledger that sells your sells your seed phrase for a fee. No, I don't know. You can play this argument. Um, I guess the only thing that I could say is some people believe in certain assets, right? Some people are only, oh, I want to own real estate because I get paid every month. Some
Yeah.
people want to own Bitcoin and they don't care, right? They have FU money and they don't care. Some people, Bitcoin is only a small percentage of their total holdings and they'd rather be long or hold, stocks and, tech or whatever else that they feel like, or VC. My only argument to we can go into this, right? I live in a second, third world country, and those are the people that need decentralization more than the first world. So while the US is crying, oh, we don't have derivatives, oh, we don't have all this fun things that we can't trade. Well, those people aren't, well, unless you're in a regional bank, those aren't the people that need to be saved, right? In the second and third world country, you have for example, you have Argentina, who's at almost 100% inflation year over year. So if you held your money in a bank, your money is worth zero, and you could have held Bitcoin and lost less, or you could have held USDC and made money. But for these Bitcoin maxis that are just, they read the Bitcoin standard a few too many times. Either they don't live in the real world and they have enough money to play out this cycle of 50 years, right? Or whatever, 10 years. I don't know if the world's ending tomorrow, right? But the 50-year cycle where Bitcoin becomes a world reserve currency and the central banks move Bitcoin instead of moving gold or forex reserves. Yeah, maybe that happens in our lifetime, but I don't think you should be a Bitcoin maxi. A small percentage of your portfolio or some percentage of your portfolio should be in coin.
You're talking to the wrong audience here, my man Marty.
No, I'm not. I just wanted to present that question and see the answer because like that's such a big part of when people are like, oh well, if you held gold versus Bitcoin, it's like people are a little more comfortable with gold versus Bitcoin, and there's obviously a lot of regulation things around it where people might not be able to do that. So yeah, cool.
Yeah, I don't know, to go a little more into that, right? If you had one Bitcoin or one gold bar, which is easier to get dollars for? Bitcoin, right? You can sell it on an exchange or you can go peer to peer. You don't have to take a shark price from a pawn shop or something, right? You don't have to do this. I know it's still peer to peer and person to person, but I have 100 gold bars. I need to move it tomorrow. Good luck, right? Unless you know the right people. Oh, you have 100 Bitcoin? Oh, yeah, you can TWAP that out in a few hours, in a day.
Right.
Makes sense.
You can OTC that, but if you're in the States, how do you bank that money? Who moves that money? You can make as much money with stocks or gold, and no one cares. You make $1 billion with Bitcoin. Oh, the fucking flags are going.
You're not wrong in that respect.
Gensler's calling, dude. Gary.
I like that. So let's pivot now for a sec, Marty, and talk about this gamma exposure strike by strike. Can you kind of break this down for us and how you would use this, I guess, to inform your trading strategies and decisions?
Sure. This is a simple we're going to get some backlash here for sure. This is a simple, so I'm going to explain it, right? This is a simple gamma exposure visual chart, and gamma is, or these lines show the most concentrated open interest in specific strike prices. This one is for Bitcoin. The top is calls and the bottom is puts. This is just pulling the data from Deribit directly. This is the same as Liquiditas, whatever the hell you call it. I know that the GVol guys will get mad at me for showing this one and not theirs. They go down to the millisecond or nanosecond or whatever and push out that it's maker or taker, right? The actual trade is maker or taker, not just overall open interest. They actually show, maker open interest and taker over interest, open interest. If you want their chart, you can pay them 30 grand a year and go ahead and have theirs. But ours shows exactly the same things. That essentially these lines, this bar graph shows the major support and resistance in options and how people are positioned in the options market. So the most notable strikes are 27K, which isn't noted, but it's that large blue and pink line, 28K on the call side, and 30K on the call side. So for just looking at this at a glance, you don't have to take this to heart, but instead of drawing meme lines on the trading view, you can pull this up, and these are your real support and resistance. So essentially you're looking from 27K, which is where we're sitting right now, to 30K. If one of those breaks, you get a phenomenon where the makers are offsides essentially, and they have to either rebuy their hedge or rehedge or sell out or rebuy depending on what side that they're on, and it has to be instantly, which is where you get this. Let's say if 28K breaks, you'll go to 29 and 30K really fast. It's like a gamma squeeze essentially. If 30K breaks, you're flying to 32K. You'll get this phenomenon where the makers are fully offside and weren't expecting a move like this, and they have to rebalance all of their Greeks. So you get this huge push in price. For now, I'm comfortable in this 27, 26 to 28. The interest this is all strike prices, right? Into March of next year, I guess, is Deribit. So you even have interest to, what is that, 35K? What are the odds of that? Who knows? That guy will cash. But the real interest is this 26, 27 to 30K for now. So we'll stay selling options outside of that range until something changes. I think the ETH one is a little more, the next one, the ETH one is a little more interesting. Yeah, it's a more clear visual that 1800 is the strike for ETH. So when price approaches 1800, you'll have traders start to close out their puts, and the dealers will rehedge, and simply this is a simple way, right? Simply the price will bounce off of 1800. That doesn't mean it can't go to 1790, 1780, 1760 like we saw a few days ago, but the price regains above this 1800 level, and then we're ping-ponging this 1800 2K, which I'm assuming you can go look at a line graph or a candle chart and find out. If 1800 breaks, you're going far fast.
Yeah, I mean, that's like,
Go for it.
if you look at the way people analyze markets and you keep referencing TradingView and basically support and resistance, the stuff we use around liquidity, like if you were to go look at liquidation levels around those, it's pretty similar. I think
Yeah,
where like,
go look at ETH. What's like 1750? That should be like the most, because
um,
everybody went long 1800.
let me see where the ETH stacked up. But also, it's like um, ranges are typically pinned by the options markets. It seems too, like
Not
that
as much as in
the band,
TradFi though, right?
right?
Because crypto options are so small.
So
MK Ultra, this is for, okay, that's a rough name, but this is for all expiries. So
okay,
up until March 2024 on Deribit.
got it. So your bottom would be,
1750.
yeah, I mean
Okay.
this, you'd be these lows essentially, right?
Yeah.
And
Yeah.
then I mean
Yeah,
1800, 1850, like you get up here, you're probably going to go to, this high 1800s, maybe
and
1900.
pull back the gamma chart. 1800, 1850, 1900. Yeah, 1900 is the next call, right? 18 and 19. So you're in this weird ping pong. But if you go below 18 and you stay below 18, you're going to get this super fast rush all the way down, to
1600.
yeah, to places that we don't want to go to.
Unless
Depending
you're
what your
short.
position is. Yeah, I was gonna say.
Yeah, I don't want it to move at all, okay, guys? I need it to stay right here.
That's true. Yeah.
Yeah.
So we also got another question here, real quick, Marty. What do you think has more inefficiency, options trading or futures to take advantage for profits?
There's a simple. Can you post links to the chat? Can
Uh,
you? Not me.
yeah, absolutely. Just drop it to me.
Yeah. Yeah. I think that this is an interesting. I'll just type in straddle with one D, STRADLE .xyz, and all your NFTs will come to me in 2 seconds. Okay. Yeah. So if you want to pull that up on the visual for everybody, it's a simple. You can add on the drop down Deribit, Bybit, Premia, Lyra on different chains. It shows if you buy this and sell on this platform, there's a simple arbitrage here. Of course, you're going to need money. There's no prime brokerage for this, so you're going to have money on both exchanges. And if you sell one contract, like on the first one, you're going to make what is that? $4, right? On the drop down, can you add on the markets drop down? Top right. Yeah, add
Oh, this one?
Premia,
Yeah.
and Synquote.
Synquote.
Yeah. And then you can make a few dollars here, a few pennies here. Sometimes it's like a $300 difference. Okay, but I don't know how many contracts are there, right? So I don't know. You get 10 contracts, you can make 10 grand, but you need money on each exchange to do this. And sometimes it's DeFi versus centralized, and sometimes it's centralized versus centralized. But this is a very interesting, simple place for people to arbitrage or look at arbitrages. Because people always say like, oh, Lyra is the best price. Well, according to all of these, Lyra is the worst priced.
That's interesting. So how often do you use arbitrage strategies in your options trading?
Minimal. If you're doing this manual, like one contract, a few contracts, sure. Somebody, I'm sure, built a bot and is going to beat you to this. Maybe not, right? But for the guy who's just trying to make, I don't know, what is this, $4? Okay, that's cool, right? They have a $100 position or $100 portfolio, $1,000 portfolio. You can make some simple monies here. I don't think you can stack 1,000 Bitcoin, trade on this. Of course not, right?
Yep.
It's for the smaller guy here.
So we got another question from MK Ultra. You mentioned large players are selling short-term vol and positioned for expansion next year. Is this via calendar spread, double calendar, or another type of structure?
It's mainly a calendar spread, right? So they're selling June and buying September's or December's. So the credit from the summer, if the price is above, essentially if the price is above that, then they'll have a free call into the end of the year. And their theta isn't that bad until that expiration in summer, because one is collecting and one is paying theta. And theta, again, is that daily payment you make to the maker.
Got it.
Or you can collect it, right?
Let's do some pivoting now. Let's talk some markets. Trip, what are we kind of seeing on the BTC and ETH side of things, and see if we can kind of get Marty's take from an options point of view, how that kind of correlates.
You want to talk liquidity or just like about the chart itself? Because
either or. Well, maybe actually let's. I'd kind of love to also get Marty's take on this. Let's talk about macro DXY and then kind of move back to crypto because I feel like the whole risk on, risk off scenario is kind of key right now. With the fact that we kind of broke out of this range, then we can kind of see what Marty's thinking from the macro side of things.
Sure, sure. You want me to start?
Yeah, let's get your take and then we kind of see what we're looking at on the chart.
Sure. I think the last 2 years you had like this whole, I don't know, what was it, like a year and a half ago, 2 years ago? Oh, geez, it's already been 2 years, I guess. A year. Russia's invading, the world's gonna end, sanctions are coming, all of this, right? So that's past, right? Like the only worst thing from here is nuclear attack, right? Which is that's a
Yep.
black swan volatility event, and I don't wish that upon any of us. And I don't need to make money on that day when people are suffering. So that all of that stuff is all behind us. This war, this NATO, this all of that is totally behind us. I think. Moving forward, the only real catalyst I see is that Bitcoin halving, the supply crisis in the Bitcoin blockchain, and um, the presidential elections. But what's interesting this year is the Fed going to pause? Are they going to cut, or are they going to have a surprise hike? I think that inflation is a little more sticky, and what are the transitory and all that shit that they were saying, a year ago, that they lied to us for sure. And that if you believe Yellen anyways, that's on you, right? But into that, you have inflation that's really sticky, and I don't think that they're going to cut like they say they are. Maybe, and I don't think that they want to do a 25 basis points cut and then, oh crap, we have to do a hike. I think that their data is a little dated, right? Oh, the FOMC minutes comes out a month later. Like, geez, why? The CPI is a little late. Moving into summer and a year, I think you get this pause and we see where inflation goes, quote, naturally. And then hopefully we get some cuts into the end of the year. For sure, we'll have cuts in the presidential election year because nobody wants their stock portfolio down. Everybody wants to be a winner. Everybody needs that money, honey.
Makes sense.
Yeah, so
So
like
Trip,
those two arguments, right? Like you can look at the crypto argument, you can also look at traditional markets. Like maybe you get another 25 basis points in June, but I don't know, given last inflation print and seemingly it's going to be going down, and you start to look at year over year numbers. Um, and the whole kind of credit tightening and regional bank crisis is somewhat kind of doing the job as well. So I think like what's happening in traditional assets is the market is anticipating a pause. I don't think it's not going to be a cut, but they're anticipating the pause, right? I think that the Fed has almost already showed their hand and people are trying to front run that, right? But they've also acknowledged that inflation is going to be higher for longer, right? And that's just like it's sticky on the way down with like a lot of other things, right? Pricing. So if the market is kind of reset expectations, like people want this to go down, like, but if you look at the Nasdaq and you look at the S&P, I mean, we're kind of just like not really doing much. Nasdaq's showing obviously strength because of tech side of things, and there's large number of buybacks going back, right, from big tech firms, right? So there's like a force in the market that's keeping it afloat, right? And so if they come out in June and they say, we're done hiking and that's the cycle, right? Then does the market sell off in an event like that, or you're anticipating then the cuts? And on the timeline you just said, that matches up with a lot of like bullish call buying on those strikes, which is around like the Bitcoin halving, right? And if that's like where liquidity comes back into the system, like those events seem like almost they would like. I don't think like the Bitcoin halving, maybe it can, is just going to go up and like other risk assets can go down, right? They would go up in tandem because more liquidity would be coming back into the system.
It's like a perfect storm, right? money's back in. There's a supply crisis in Bitcoin, right? The miners get paid less. Well, the miners need to get paid. So the price increases. That's like the simple basic of what the happening is. It seems like this perfect storm. I think you're going to be talking this macro. You'll have the macro LARPs, but you're going to have this pause, and inflation's going to be sticky. Inflation will be in this 5%, or rates will be in this 4 or 5%. We're at 5% plus. And when they start cutting, I think markets would have already priced that in maybe a quarter before, at least a month before. Like, oh, we
Right.
already know that this is, you're seeing it like right now, you're seeing tech go up because of these buybacks. You're seeing AMD do, oh, the new chip, and NVIDIA is doing the new chip. Go look at the NVIDIA chart. It's up only. Go look at the AMD
Yeah.
chart. It's up 4% today, right? Go
Right.
look at regional banks. My up and down 20% every day, every hour, right? This still hasn't been solved because this credit crisis that we had, credit crunch, credit crisis that we had, this isn't solved yet. Moving forward, I think you just play your hand and you wait. But don't think that I don't know if those people are wrong buying those Q3, Q4 yet. Maybe they're just trying to get in early. But I think you could be, not financial advice, right? You can get comfy into 2024, 2025 leaps even on some, tight leaps or some call spreads or something like this on some upside movement for sure. It just seems like a perfect storm.
Yeah, I agree.
I can see that. So, Trip, let's talk about DXY for a second. We have the chart right up there. Kind of, we broke out of this 37-day range now. Is this, in your opinion, risk off time? Should we be preparing for a lot more nothing in crypto, but more to the downside than upside?
I mean, if it starts to trade up to that black line around 103, right, and takes out the stops. I mean, we did kind of, I would say that's like an impulse out of a range. Maybe you're retesting it right now. Then it would put pressure on BTC, ETH, risk assets near term. Does that happen going into what we have? When's the June meeting? The first week or somewhere around there.
I think so.
So we have like a little over 2 weeks into that. Yeah, I mean, look, if it falls back in and starts going down, then things are gonna go up. It's not always like the perfect correlation of the dollar going up and other things selling off. Like it is like when it has large impulses or noticeable, it's at noticeable extremes, I would say. But I mean, we're kind of just like in a chop range with traditional assets, right? I think BTC and ETH have kind of been underperforming in that regard. But yeah, look, if this starts pushing up, then I'm expecting prices to go down. It's kind of that simple.
Cut and simple. Nice. Marty, do you often look at correlation between DXY and BTC or any other of those assets to kind of gauge where you're at in the markets?
No, but maybe I can add it into that chart and I can send it to you this week or whatever. The
Cool.
DXY, Bitcoin, DXY, ETH. So, maybe you guys can talk about that in the next show.
Sure.
We could do all the way back to whatever, a few years back. What's interesting for me in the option space specifically is the quarterly expiry, right? So you have the June meeting, I don't know, like you guys said, the first, second week, and then at the end of the month, you have the quarterly expiry. And this is a time where big funds will roll trades. It's like the biggest notional expiration is on the quarterly. They don't care about the weekly. They don't care about the monthly. It's these quarterly, right? 4 times a year where they put on these huge, massive trades, especially in SPX, right? There's the JPM collar
Yeah.
trade. Go look at that trade, and that trade always puts a floor in the ceiling on the market, and you're going to be trading in that range for the next quarter. And whoever tries to say you're going above or below that is gone loony.
I like that. So yeah, let's pivot a little bit towards Bitcoin now, Trip. What are you seeing there? And then I can kind of take over and look at ETH.
All right, let me share this. Let's see here. Let's put on the daily. Can you guys see the Bitcoin chart?
Yep.
Yeah, I mean, if I look at this like in a simple manner, right? Like I know there's people who said this was like, why is this resistance? Like it's pretty clear, right? So we did 31K, right? Into this whole zone. Okay. We
Yep.
put in a low here, right? 27. We came up,
Yep.
did 29.9. Everyone got bullish. And now we've put in a lower low. So this is a confirmed lower high based on this low being broken. So for me,
Yep.
it's like, yeah, I understand that you say that this could be a range 20, this like 26, 8, I don't know, this whole thing. And we ran this, but if I just like, I'm looking simply at market structure, then at some point there's going to be a lower high. And then you see if you make a lower low off of this, and that's going to confirm the lower high, right? Until you get
Yep.
above here, like 29.9, like you're really like you have to make the higher high in that regard. If you do, then you're probably going to go to some of those, maybe some of those prices that Marty talked about on the strikes of 32 or there. But if I look at, Bitcoin, let's just pull a fib on an obvious swing point. And let's take the swing high here, and I always do it backwards. Sorry. Basically, there to this key low, which is what is this? 19.6, 19.5.
Yep.
All right, so we're kind of sitting at the 38.2. I mean, we didn't quite make it to 25.2, which was daily key June, that 50%
Yep.
Fibonacci. The 61.8, like this region is like obviously a pretty big one. So what I think until we actually get above here is you're going to make a lower high, and then you're eventually going to come down and retest here. Was this it? Like, was 27.7 the lower high? Maybe. And then, coming down here to retest this zone, then you kind of see what happens. Because, like, this is just from strictly an SR standpoint. So that's where my head is at if I'm just looking at like market structure. Like it's bearish market structure on the daily. I don't
Yep.
care what anyone says. That's just like a fact based on lower high, lower low. So for me to be like super bullish and think that, this is the range low being run, reclaimed, and we're going to go up here, it's not really like it's not a realistic approach to me. And given that
Yep.
like the market is not super short based on liquidity basis, right? We've seen from BTC and ETH that the deltas are green, so there's a lot of longs in the market. Um, that's where my head's at, right? And then we can do the same thing on ETH. Can you guys see this?
Yep.
Um, Again, here's our supply zone. Here's our high. Call this our low. We went up, basically hit 2K, just through it. And now we've taken these lows out. We made a lower low. So where's your lower high? And then, are you going to come down maybe to this kind of demand zone? And we can do the same exercise with just using the obvious swing point up here as the high. And this one, which is what, 1390.
Yep.
Where's the 50% fib on that? Have we come down to touch that? I haven't looked yet.
1770. Yeah.
Right? So, yeah, we hit that. I mean, do you come down here if Bitcoin drops to 23 and you're going to kind of get this 1670, 1660, like these highs? Maybe. Can it go up to like 1900 and come back down? Yes, it can. I know the quarterly open on ETH, if we look at like spaceman levels, I don't know if I have them on here. Let me see here. I think it's like 1824 or something. So we're kind of sitting at it right now, which is a big level. Obviously, 27K is a big level. So, yeah, market structure wise, like it's bearish on the daily. So my bias is directionally down, and that would probably coincide with a move up with DXY on an extreme move
Yep.
up to like 103, that zone.
I dig that. Yeah, just looking at things from my perspective here as well. Kind of more zoomed in here, but just like yeah, we talk about bearish market structure on the higher time frame. We have this Monday, pretty tight Monday range actually. The high being 27.7, the low being 26.7. It's $1,000 range, which is pretty tight for Bitcoin in and of itself. Seeing as the last two Mondays we had pretty strong moves down. I think it was like from 29.2 down to 27, and then before that it was like 28.8 to 27.7. So we're in this tighter range, and now I can see something like you mentioned, like where's the lower high going to be? We have our Monday low here at 26.7. And I think if we pull up the liquidity, we have licks right down to 26.5, 26.6. So I wouldn't be surprised by something, sweep these lows, reclaim, go for the Monday high, potentially even this quarterly open. I know we're above it on ETH, but for BTC, I can see, a case to have this high swept, tap this quarterly open, and then kind of see where we go from there. So yeah, it's going to be I'm again a bearish market structure. We're probably going lower before we're going higher, but where's the lower high? That remains to be seen.
Yeah, I mean, if we look at like ES, right? Like, is this candle right here like indicative of something where it's gonna come down to the range low, um, based on potential move in the dollar, right? Like this, it tried pretty hard here. I mean, and this has just been like annoying, confusing to figure out. But if risk starts to sell off, then maybe that'll translate into the crypto markets. The Nasdaq though probably put in what it put in a new high today.
Up only today.
Yeah, that's the thing. Like this is what's driving the market, right? And that probably says a lot about the breadth of the market. Maybe Marty can talk about that more. Like it's not strength across all assets. It's mainly like one thing, and it's driven a lot by that one thing and buybacks, right? So
Bard. It's driven by Bard, by Google Bard, and that's it. It's driven by tech.
yeah, so if there's a correlation crypto to tech, I mean, people like to look at like the correlation at one point with the Nasdaq in like ETH and BTC. Well, the Nasdaq's going up and the other ones aren't. And like, is crypto leading a sell off just like it kind of leads like some of the moves up? I don't know. I try not to get into the nuances of it, but like market structure wise in BTC and ETH, it's bearish. Traditional assets like the Nasdaq keep going up, so the correlation trade is not like really there for me. So I don't typically look at that. I look at the liquidity and the chart at this point.
Yeah, Marty, let's actually touch back on that correlation chart we shared earlier. How do you kind of see BTC and Nasdaq correlation? Obviously based on the chart, doesn't look like they're too heavily correlated. Am I correct in that assessment?
Yeah. A high, right? It's -1, 0, and 1, right? So -1 to 1. High correlation is a strong connection, right? 0 is there's no relationship at all. And go
Yeah.
look at the chart. Where are we? 0, right?
Yeah,
That's an hour and a half ago. I sent Zoran that chart. Don't mess with the Zohan, the Zoran. Send him that chart an hour and a half ago. So it's basically saying we have no correlation, which is exactly what ISO just said. We see tech booming, Bard is up, AMD's flying, Nvidia is like almost at all-time highs or something insane, and crypto's just dead.
Yep.
That correlation chart is live, right? So we can run that whenever. If you wanted to use that later, we also put that one out in a monthly newsletter too, so I can send you that one in the future. But yeah, it's a pretty
Awesome.
interesting one to look at, and it shows exactly what ISO was just talking about. No, there's zero correlation right now. There's not a negative correlation. There's not a positive. There's a zero. Nothing. Bitcoin's not moving, and Nasdaq is flying.
Makes sense.
Flying. Well,
So
1%. Ooh, we don't even get out of bed for
yeah,
1%, right? Fuck.
back in the day. So Trip, what are we looking at here with ETH BTC? What's the I guess take compared to Bitcoin?
yeah. I mean, we've talked about this a lot. I mean, I'm not a huge diagonal trendline guy, but I mean, it's pretty noticeable. And like from what is this, the start of the year essentially, we've kind of just been in this call it downtrend. Like it talks about if this were to break up, then it could be interesting, but we're not really there yet. It's kind of, but it has been grinding up, which is somewhat interesting. But I don't think you can read too much into it for like BTC and ETH. It also could just mean that BTC goes down and ETH goes down less, but they both can drop in USD value.
Yep. Marty, how do you guys position? Do you guys have a preference for selling BTC or ETH vol or one over the other, or is it just based on what your bot kind of spits out on the math side of things?
ETH you can sell more, right? Because it's cheaper. You get paid less, like I don't know, on a near the money, maybe a couple day expiration. Maybe on Bitcoin you're making, I don't know, let's just round it off, $400, $500 per contract, and on ETH you're gonna make 15. Okay, but you can sell, 3,000 ETH contracts pretty easy. You can't sell 3,000 Bitcoin contracts pretty easy. For us, size and our overall thesis on the crypto market is we want to accumulate more ETH. So when we trade on Deribit or when we block on Paradigm or Greeks Live or whatever, it's all through Deribit. It's coin margined, right? So that just means you're stacking ETH or Bitcoin. You're not stacking dollars.
We like the convexity.
Yeah, the only thing is if ETH doesn't figure out this gas fee thing, and if they don't follow through with their what they said they were going to do, which hasn't been the case so far, it just takes a long time, then that trade will pay off, right? You're going to get more return faster with ETH, hopefully, right? Let's say hopefully. And it's easier for us running the data sets and everything. It's faster and quicker for us to do it on ETH than it is on Bitcoin, right? I mean, you can pay AWS as much money as you want, but we like to pay a little bit less. Amazon makes enough money.
Love it. All right, let's kind of wrap things up, Marty. I want to kind of zoom out for a second, get a more holistic view of Marty the trader, Marty the options trader. What's, I guess, one piece of advice you would give to a newer trader who's trying to get into options, trying to kind of find their or even build their system in the options markets? What's your, I guess, couple pieces of advice you could kind of give for that?
Sure. When you read Marty's tweets, it's a joke, right? It's not easy pimps. All right. Let's just put that one out there. But I put everything out there for free. I'm always available for whatever DMs, as long as it's not like fucking asking for money or something stupid. Always available. I have a pinned tweet of about, I don't know, 10 or 15 books that you can go find, from simple trading stories like Reminiscence of a Stock Operator all the way to Options Derivatives by John Hull, which is like a fucking MBA CFA level book. I think that those books are pretty basic and standard to understand, like the simple ideology of what an option is. I think that all of the information is out there for free to understand options. You have Merrill Lynch, you have Fidelity, you have all these, TradFi guys, Charles Schwab, putting out all of this information for free. You have a bunch of books that are out there for free. Well, you could pay for them too. Hopefully you pay for them. If not, whatever. And the space goes as deep as you want to go, right? There's always going to be somebody smarter than you. There's always going to be a bot that's faster than you, unless you're hosting and racking at the same servers as the exchange. Yeah, sure, right? Good luck with that, right? There's always the Citadel kind of player. But if you're just really starting out and you're holding coin and you want to make more coin, you can sell those covered calls, you can sell the covered puts. There's some simple, super out the money, super low risk. Oh, what's the lowest risk? Like if you sell a 40K Bitcoin call for June, I don't know, you make I don't know how much, I haven't even looked, but you make some shekels. If the price goes over 40K, you have to sell your Bitcoin at 40K. If it doesn't, you get paid that shekel. So there's some simple lower risk trades of options for people to get into. And I think the space is young, and I hope that, more people come into the space.
Love it. Awesome. Where can people find you besides Twitter? Anything promotional you want to kind of leave us with?
Twitter's the space. I do like a long form newsletter for Premia, which is a DeFi options. that's more catered to retail. But I think that the newsletter is pretty good. I think they put it out on Medium. I'll send you the link to put in the show notes or whatever for people to
Awesome.
find. I'll put out a tweet. But it shows some of those same charts that I put in that I sent you tonight. It goes in how to read the charts, how you could use the charts, and that will be an ongoing thing every month. But besides that, I do everything for free.
Awesome. Well, again, Marty, thanks for kind of staying up and giving us the options 101. It's been great, man. Appreciate having you on.
Thank you, guys. Appreciate you.
Yeah, thanks for coming on, man. That was great.
Is ISO going to follow
right.
Marty? That's the question of the hour.
Oh.
Ooh, fellow
I do.
panda.
I think I do now.
Oh, now he does. Okay.
No,
Dude,
I
that
did
was-
like 2 weeks ago or something. I forget. I think maybe Nick.
I think you unblocked Marty. Yep, unblocked. Damn.
I'll
Rough.
follow you.
Love it.
Alrighty, pimps. We'll talk to you later.
Later.
All right. Thanks, everyone, for tuning in. We'll catch you guys next week. Captain Cole signing out.
See ya.
Cheers.